So we will begin, and good morning all, and welcome to this 2015 annual results presentation, which points to the successful AXA Ambition strategic plan. And we will listen to Henri de Castres and Denis Duverne, who will present the highlights of the year. And then we'll wait for your questions. We have a certain number of top management team members present here in the first rows who are prepared to take your questions in all of the business areas that are so specific to the group. So priority, of course, to questions in the room, but also to those who are listening to us online at AXA.com or who would like to ask questions at the end of the presentation. Thank you very much. The floor to Henri de Castres. Good morning. Thank you for having chosen AXA in an otherwise overloaded morning for you, because news, of course, are coming in from all over this morning. 2015 was a very important year for the group because you can see that we are here displaying very high quality results. It's also the end of our AXA Ambition strategic plan launched in 2010. And you will see that it has come to an extremely satisfactory outcome. Why is 2015 a good year for the group? Because we have reached a record level as regards our earnings, 99 billion euros, and not quite at 100 billion euros, but this is the highest level of earnings ever reached by the group. Of course, here our underlying earnings are at 5.6 billion euros plus 10%, the highest ever reached by AXA. So Solvency II ratio at 205%, which puts us in a highly satisfactory position versus our European competition at a time when this regulation is being applied and demonstrating the solid balance sheet of the group, which has also allowed us to cross market crises, storms, and other issues. We also now have 103 million clients, which shows our global presence in all of our business lines. This is a very solid base to allow us to pursue the group's transformation. Now, a few words to return to AXA Ambition. When we launched AXA Ambition in 2010, we were absolutely convinced that we needed to change the group and accept a transition after the strong storm of the financial crisis. We needed to apply this three pillars. Selectivity first. We were present in many markets, in many countries, but sometimes present only on segments of business lines or geographies that did not bring enough profitability. So we needed to be more selective. Also, we needed to speed up our internal transformation policy, for example, as well as in taking larger and larger positions on emerging markets, which seemed to us at the time to be promising for the future, despite current volatility. And also our costs were too high. If we were to remain competitive and effective with our clients, we needed to generate savings. And we knew that we would have to invest in new technologies, which would, of course, increase the quality of our offer to the client, but that had an inherent cost. And you will see as we share with you this presentation this morning that the profitability of shareholder equity has grown enormously over the period. Our balance sheet was strengthened and is now extremely robust because despite an economic context that was not favorable, we found a capacity to put forward recurrent and regular results for through our different geographic presence, and also in the improvement in our industry of our services. We are not experiencing this as a fatality or as a threat, but rather as an opportunity to be stronger in our positions and to convince even more clients. If we look at the four financial pillars of this plan, they have been achieved, or they have, of course, been exceeded. 7% as regards the underlying earnings over 5 years, while neither the markets nor the stock exchanges have evolved the way we expected them to. And also the group has generated cash flow higher than expectations. And we also very significantly dropped our debt levels. So this is the portrait of a group that is healthy, that is breathing on the market, so to speak, and also developing for the future. Growth was compliant to the first pillar of Ambition AXA, and it is here selective and sustainable. Selective because if you, for example, look at life insurance and health business lines of the group, not comparing it to one financial year only, but what it was in 2010 at the beginning of the period and what it now is at the end of the period of the plan, you can see that there is a strong transition, although gradual, in favor of unit-linked and protection and healthcare, which are two of the major business lines that we felt were important to develop in-house, because these are expected by our customer base and also because they bring in very satisfactory margins. You can see that general funds that represented about 1/4 of the group's activities in 2010 today only represent 13%. Why? Because it seems to us that these products in the current situation are less interesting for our clients, but they're also less profitable for us. This shift in business lines occurred as we preserved growth. Look at the growth on new business, for example, over the period, while we improved the margins on all of our segments, which today puts us in a highly favorable situation where life insurance margins have grown by 50% in 5 years. So we are in a situation that we consider to be solid to move on to the next step. As far as P&C is concerned, 4% annual growth consolidated with the P&C numbers is a strong situation in a context where the socioeconomic factors were not necessarily in our favor. We've also been able to improve our technical results. We are at 96% of combined ratio, which means that the profitability of our activities was supported by sustained growth. The second pillar of AXA Ambition was the determination to accelerate our approach to certain markets, and particularly in emerging markets. You saw here the acceleration in UCs, in health, but the geographical transition of the group was a strong point as well, because over the period we have invested a little above 5 billion euros in emerging markets, essentially in Asia, where we have become the first international P&C insurer with positions that today are extremely robust. Today we are the third in life as well, through a succession of operations in China, Indonesia, India, Thailand, and in a number of other countries. We have begun our penetration in Latin America, the second P&C in Mexico, the third in it's not Latin America, it's also the Mediterranean basin as well, and Africa. We are the third P&C insurer in Turkey, the third in Nigeria, and here again on markets that are markets where the middle class is growing, and we have taken here significant positions. The only disappointing segment of this geographical shift was Central and Eastern Europe, which quite clearly, although we considered that they could be an area of growth, is not today, in our opinion, an essential pillar for growth. We have strengthened our operations in Poland, but on other markets, we have reduced our footprint because we feel that the conditions are not there to help us maintain a sustainable presence with growth and profitability in mind. But as you've seen, the global image is that despite short-term turbulence and the places in the world where the wealth of this world will be created, we are present there. This was not undertaken at the expense of profitability. On the contrary, we have been able here to make 2 billion euros in Asia, and the consolidated underlying earnings in Asia, although we are in an investment phase because a transformation phase, could be multiplied by 2. And this, of course, happens independently from the economic context fluctuations. Today, people are talking about China with a slightly disappointed tone, but we can see that through our joint venture with ICBC, we have progressed by 50%. We're the first international insurer in China. Our direct P&C activities with AXA Tianping have grown also by a large percentage. So you see that our decisions are based on very strong rationales. And also we can see here, if we exclude Japan, a growth of 50% in Asia. If you look at all of AXA's business today, China and Japan represent a very large chunk of the AXA pie for the future. Of course, this does not mean that we are divesting from mature markets, but it also means that we are able to change our position to increase our earnings. Of course, here, the other pillar of the AXA Ambition plan was efficiency. We here had set for ourselves a goal of 1.9 million euros in savings that we have exceeded, because we are almost at a billion. So, of course, this involves the digital and technological transition and investments a little under 1 billion euros in future technologies. So the net efficiency gains are close to 2 billion and have not prevented us from investing perhaps on other markets and repositioning the group in an area that I would like to discuss, which is knowing how the group can integrate in its offer, in its customer relations, everything that involves digital, but also to control what is done today in terms of data. That is in itself a revolution in the value chain of our business. All of this involves new significant developments around 3 pillars. How do we explore the universe of these new technologies to understand what's happening there? Secondly, when we have identified things that are interesting, we need to increase that level of involvement, and we need to invest in these stakeholders, in these technologies, to benefit from them. We have created AXA Labs that are in fact reconnaissance teams of this universe that have allowed us to take a new position that I consider to be totally exceptional, because we are recognized as being in the field of financial services, one of the companies, if not the company, that has done the most in these segments to position itself on them. Engagement, the beginning of the taking on board of these technologies in our business, the data innovation labs, the scientists and technicians in these areas that we have brought together to work on developments in Europe and in Asia, and the investments that we have made in this area cover practically all the segments of the value chain of development and distribution in our business. Of course, all of this is involved. The 22%, for example, are invested in CRM, 34% automation and process. And you can see that this is a deep transformation in the group's operations that is underway. This does not prevent us from investing. We have dedicated 230 million euros to AXA Strategic Ventures, that is an interest holder in the equity and capital of startups and innovative startups at that, which we believe will have a medium-term and long-term impact on our business. AXA Strategic Ventures has already undertaken a little over 15 investments in this area. So, of course, some are fraught with risk. We will not be successful in all our investments, but we are also certain that we have here invested in nuggets to feed our future growth. We've also invested 100 million euros in Camet, which is a company that will have as its purpose within the AXA Group to develop solutions in insurance. There's a historical challenge here, which is what we did with direct insurance, where at the time in the past we had invested, of course, significant means to develop direct insurance. And everyone was skeptical. But today, if you look at this particular project, direct insurance is on a par with what we are doing today with Camet. And then you have seen that in Africa, we have invested 75 million euros in a development that covers the new territory of Africa and the new technology, which is digital. We have become shareholders of Africa Internet Group, which is an AIG, but it is not the AIG of insurance, of course. And we have an exclusive agreement for distribution of insurance products. So sometimes this demonstrates that regroupings bring convergence, and we should be in a position to expect fairly significant developments in the future. So you can see an AXA Ambition strategic plan that has a very favorable outcome, creating solid basis for the future. Our future will continue to be one of transformation. We have wanted here to serve a sort of spaghetti, which can be unraveled every month at AXA. And this is on a month-per-month basis, as you can see here on the graph. I'm not going to go into the details, but what we have done over financial year 2015, and you will see that there is a very strong coherence and cohesion between what we have decided to do in the operational and strategic approach areas. So whatever the market turbulence, the fluctuations, we will continue to walk down this road because of the robustness of our balance sheet and the strength of our teams, and this is very favorable to the long-term plans we have. Of course, we need to be a citizen-minded and engaged company. And this is something that over the years, both enterprises and their partners have become more and more aware of. And we think that the profession of insurance, that is one of protection, preservation, long-term, is perfect for a long-term engagement of the management and the teams to all of these subjects. And just to remind you of the innovations or the highlight initiatives that were ours in 2015, I would like to emphasize what we said as regard our coal investments and carbon footprint. COP21 was a major success at the end of 2015 because for the first time 195 countries came to concluding an agreement that is far from perfect, but that in fact is going in the right direction to try and mitigate the impacts of climate change. amongst the industrial and commercial enterprises, we were among those who rose awareness much more quickly and adapted to the new conditions. When we announced that we were going to divest from our coal-related investments, a divestment of 0.5 billion euros, we were followed by the rest of our competition. We have also published for the first time in 2015 our carbon footprint, which means that this creates transparency. This too has launched a positive movement. And all of this today brings us to a situation where our positioning is favorable, particularly in the 2015 DJSI index, because we are in the fourth percentile, which means that we are among the 4% of the enterprises most engaged and competitive in these areas. AXA's development, its economic and social presence, aren't just limited to a solid balance sheet or to the number of clients, and also of a higher dividend, where you will see that growth has been interesting there too. But I think that it is also based on the imprint that is positive and sustainable. This is what I wanted to share with you this morning as regards these 2015 results, which once again I believe to be excellent quality results, and Dennis will now go into the details. Good morning. I am going to present the main financial highlights of AXA's business, and we will begin with life savings, retirement, and health. And I would like to return to the fundamentals of our business. We are here to protect our clients. Our clients in 2015 have seen the value of their invested savings grow by 19 billion euros. Of course, this involves euro investments and unit-linked as well. And it's a very good result in view of the economic context. We have also paid out 12 billion euros in benefits to our clients, and 3 million of our clients were able to take advantage of our healthcare assistance services through AXA Assistance. As regards our commercial approach, the sales here of life and retirement have increased in view of a positive situation. First of all, in protection and healthcare, as Henry reminded us of earlier on, 2 pillars. We have a growth of 4% comparable and 12% reported. Here, of course, led by Southeast Asia and India and China. In France, the progress is 12% reported, thanks to our products in continental Europe, Japan, and in the Asian region again, and also due to strong economic dynamics on retirement contracts in the UK. Finally, the UC investments, of course, represent over 75% of our sales in this area in 2015. This because we are emphasizing UCs and protection, and that we do not consider that for the future of the people who are preparing to retire should invest in these areas at least the essential amounts of money at their fingertips. So here we can see that the General Savings Fund was 7%, particularly in the US as well as some European countries. Net inflow in life savings and retirement represented 9.6 billion euros. Versus 4 billion in 2014. Once again, supported by protection and health with plus 5.9 billion euros, and by UCs with plus 5.7 billion euros. Finally, our new business margin remains stable at 34%, way above the number of 27% that we had set for ourselves under AXA Ambition. Now, underlying earnings. We here have seen that it is robust in protection, health, and UCs, 80%, And of course, this is quite aligned with the strategy that we have been working on for the past 5 years. And also a yield on our assets at 3.6% versus 3.7 in 2014. So you can see a very slight drop, but the fact that we are managing our assets with a duration close to our liabilities makes the erosion of the yield relatively slow, and therefore our policyholders can benefit from the results of this prudential approach to investments. Also here, the after-tax revenue has grown by 3.3% in on like-for-like basis and 12% reported at 3.5 billion euros. Now, let us look at PNC. Once again, we will start with our clients. As regards PNC Insurance, we have paid out 11 billion in compensation to our clients, a little above 11 billion to individual clients, a little above 8 billion to enterprises, and 4 million clients were covered by AXA assistance after having either had a mechanical breakdown or other trouble. Now, if we look at the development of the PNC market in detail, we can see that on a like-for-like basis, we have had a growth of 4% reported. And on mature markets, we have high performance of UK and Asia, and a little less for other markets. On emerging markets, we can see a growth of 3% like-for-like and 9% reported, with a strong growth in Asia at plus 8%, but in Turkey, a stability of our revenue linked to the fact that the automotive segment and third-party insurance was a victim of a change in legislation that was really not favorable at all, that changed price scales between the beginning of 2015 and then 2015. Civil liability and third-party damages was multiplied by 2 in Turkey. Finally, we have very strong growth, 7% like-for-like and 16% reported in direct insurance, particularly observed in the UK, France, and Japan, with a net inflow of 360 million clients in this business line. Now, in PNC, we can see a growth in 1% like-for-like and 6% reported at a 31 million euros. Also, combined ratio and underlying earnings, there's an improvement in our combined ratio. There is, of course, here a change of from 97.5 to 97.3 between 2014 and 2015. And in fact, here we can see a change from 96.9% in 2014 to 96.2% in 2015. This is our outcome as planned in the AXA Ambition approach. And of course, we are close to the numbers. And if we exclude the transformation of the pricing in Turkey, we would have been even closer to the objective that we had projected. And also, we had Nicholas and storms in Germany and storms in France and the French Riviera. But in fact, the average downfall for AXA was limited. And of course, here, the underlying earnings have grown by 3% reported and minus 1% on a like-for-like basis. Finally, asset management, the growth at plus 4% as regards our assets under management, and a little over 1,360 billion euros, up 7% versus last year. We also benefit from a net inflow that is extremely positive at 45 billion euros, 42 billion for AXA IM, investment managers, and I will comment this on the following slide. So AXA IM has an inflow that has gone from 19 billion to 40 billion, most of which from our joint ventures in Asia, and a little above that from our net inflow in China. What is particularly striking is that although Collect was slightly down in July due to the bursting of the bubble of the asset market, of course, now things have returned to positive, and we have markets that remain very strong in Asia that, of course, are to our advantage because we are one of the largest shareholders on the Chinese market. AllianceBernstein remained positive at a lower level of 3 billion euros, but asset management as well on a comparable basis, and published at 468 billion euros reported, excuse me. Now, underlying earnings per business segment, you can see here that this result has grown by 2% on like-for-like basis and 14% reported. This, as Henry has said, is the highest record level ever reached in our history. And also this covers P&C and life insurance, perhaps less sensitive to the fluctuations of the financial markets, represent a little above 2/3 of the total. And of course, asset management represents about 1/3. Now, the adjusted earnings, integrating here the capital gains, and net result at 5.6 billion euros, up 3% like-for-like and 12% reported, while the underlying earnings are at plus 2% like-for-like and 9% reported. So we are stable versus the preceding financial year. Now, financial solidity indicators testify again to very strong balance sheet of the group. Shareholders' equity has grown and here thanks to favorable exchange rates. Also, Solvency II ratio again growing as well and improving rather at 205%. So we are below the 25-23 range that we had set up for AXA Ambition. So we have strongly reduced our level of debt, which is a very positive factor as well over the period. Now, the assets of the general fund, these assets were at 520 billion euros. You know that this asset under management allocation is there to align our assets with our engagements. The duration gap has remained 1 year approximately. And of course, the investments are essentially bond-based and therefore very strongly continued over the period. On the right-hand side of this graph, you can see the investments undertaken in 2015, essentially bonds-based, with an average of 2.1% yield, which was on par with the investments that we intended to make over the exercise, and this involves very, very weak dilution of the yield versus the preceding year. And finally, but this is not the least of our information this morning, the dividend has gone from 95 cents to 1.10 to €1.10, which represents an increase of 16%. Thanks to all of our positive results, a distribution rate of 47%. Remember that early in December we had changed the indication given to the market as regards our dividend policy distribution. We used to distribute between 40 and 50% of our incoming inflow, and we said that we would go to 50%. So this year we have increased the payments from 45 to 47%, and I will now return the floor to Henri de Castres. Thank you, Dennis. I'm going to be brief in this conclusion. I think that you were convinced by this presentation that we have a very robust platform that is quite operational, that is also under development to be able to support the transformation of the group over the coming years. We have given clear indications as to the fact that we would, in June, present the strategic plan that will be the successor to the AXA Ambition 2015 plan. But we think we are solidly anchored on our markets. We have a balanced growth. Our balance sheet is robust, and the brand is a considerable asset for the group. Being an internationally renowned brand attracts partners, attracts clients, attracts high-quality staff members. Why? Because the group's capacity for innovation is recognized, and one of the rankings, there are many, but one that we really liked because it came as a surprise last year, was the BCG ranking that recognized that we were among 800 international groups as the first insurance company in terms of innovation. And we are amongst the 50 most innovative enterprises worldwide. This ranking is something that we share with names of competitors that we are honored to be among. And we are now ready to take your questions. Who would like to ask the first question? Please introduce yourself, because all of this is recorded and there are people who are listening to those who ask the question. Maga Nikolaeva Ruthers. I have two questions. The first on Solvency II. How did the financial year 2016 start off for you? There's, I think, always convergence between the convergence of supervision and regulation in European markets. When do you think this conversion will disappear? And do you think maybe you are at a less advantageous position in France than elsewhere? And also, your potential approach to investments has always, of course, been the case in your company. But you can see the competitors to talk about the agreements with the search for yield aspects. Yes, the system has now been implemented since January 1st. The different European stakeholders are publishing their end-of-year ratios. And I think that to date, we are at the highest level amongst all of the reported and published results. Of course, the asset markets are dropping, and ratios, of course, have also been impacted downwards. But remember that we are navigating a corridor that is between 70 and 80%. And today, the variation versus the end of the year exists, but is modest and does not signify that we will be facing any specific difficulties. These numbers fluctuate, and it is normal that there is some form of volatility. If there was none, we would have every reason to be worried, but there's no reason. We are navigating and maintaining our charted course. And now we have been expecting the emergence of Solvency II, Solvency II now for the past 10 years, and our product development teams know exactly how we should use this team to be able, this idea, to be able to manage the risk. Now, the search for yield aspect is true, but I think that we need to keep in mind that we do not reinvest all of our monies every morning. Now, we have assets with long-term end of contract, so to speak. And Denis told us about the end of that particular portfolio, but the AXA Group is growing at a different level and within a different dimension than others. So what are the other types of investments that we could make? What today is our reinvestment rate at? How can we have a positive investment rate today? Because the money that is entrusted to us is entrusted to us over the long term. So we can go look for the cash flow premium. And on a macroeconomic aspect, this leads to attitudes due to highly complacent attitudes that have long-term impacts, but we are adapting to these evolutions, although we feel that it will probably come to an end at some point. But I am not at all worried as regards the group's risk profile. Yes, I would like to add, says Denis, because your question involved the question on convergence of practices between the European member states. I'd like to make a few comments on this one. First of all, the supervision authority is continuing to work on the topics that we considered as European insurers, as did the European Commission, to, of course, here become more prudential in the investments and the titrization also of the investments. We're not quite there in this second regard because it's the definition of titrization on the different aspects are not yet satisfactory because they leave it up to each investor to determine whether the situation is favorable or not. There will be discussions between member countries and also the long-term rate over and beyond the period where we can observe rates. This is negative, but mid-December we reported and published what the impact would be on us, so we're not really worried. And then also as regards the disappearance of local statutory regulations that create obstacles that have no purpose anymore. So as regards research for the search for yield, all of the insurers and AXA in particular manage a certain degree of risk in all investments. And we cannot afford to dedicate more money to this risk budget because it has an impact on our solvency. So we manage it from the inside, and we do not take any more risks this year than we did last year or the preceding year. Next question. Yes. Two questions on Italy. One on Montepaschi. Is your investment within this bank about to change? And if you stay, are you a happy, confident, and satisfied investor? And as far as Italy is concerned, do you have any other specific development projects? On the second question, you know, the French, since François Ier, have always had a lover's eyes for Italy. So if we can do more in Italy one of these days, we'll look into it, but we're going to have to be very selective as to arbitrage. Now, there is not in the short-term projects on Montepaschi, it's not just our interest in the shareholding structure. We have one that is at 4%. Now, it is not a secret that in view of the evolution in the stock exchange markets, it hasn't been the group's best investment. But what we should also look at is the fact that our common JV is working extraordinarily well. It's a very profitable business. It is growing. It is managed perfectly harmoniously between all of the partners involved. As far as the bank itself is concerned, we are shareholders. We intend to stay shareholders. We believe that the management team supporting Mr. Viola has made fantastic restructuring and reorganization efforts that one day will bear fruit and will be recognized by the markets. Next question. Mr. Fabio, Italy, yes. Fabio Benedetti, Bloomberg. I had a question as regards the referendum in the UK that will take place in a few weeks on a potential Brexit. How is AXA preparing for this possibility, and what will be the impacts on the company? Well, the AXA Group has expressed its position because Paul Evans, who is the head of AXA at the UK and also the president of British Insurers, has signed in favor of the maintenance of the UK as a member of the European Union. So we believe it is in the interest of the UK and in the interest of the European Union that the UK remains there, because it is a wonderful country with very clear economic strategies, and at a time when external threats, whether they are security-based or external, have never been as numerous as today, the idea of breaking away is not common sense, and therefore against the interest of future generations as well. Next question. Giulia Riccini, also another question on Monte Paschi. You've increased your interest. We're still at under 4. It was, but I just rounded out the figure. Yes, Estelle Durand, Argus de l'Assurance. In the transformation process you've described, what is the impact on the group's business and staff members? And perhaps another question on Africa. There were some operations undertaken over the past few months on this continent. How do you intend to grow, in which business line and under which specific framework? In Africa, I will ask Denis and Jean-Laurent Granier to answer. As regards the transformation of the group's business lines, for me, it is absolutely obvious that in the industry as a whole and in services, we will see changes in businesses that is comparable with that of the 19th century Industrial Revolution. I think it is a revolution that will have deep-rooted impacts. It will probably be carried out over a full generation. It will be more specifically impactful than in the past because it is more global and they're more highly exponential. And of course, it presents challenges, but it also presents opportunities. One of AXA's strengths is to have teams that are very high-tech minded in distribution, in product development, as regards process organizations. Our challenge with Véronique and the other members of the top management team in the first rows to help people understand that it is precisely because everything is going well today, that the group is healthy and growing, that it is now, without any form of anxiety, take on board the tools that will allow us to change. Because if we do nothing, we will lose the market share that we have today. If we take these tools on board, we will be able to nibble at the market shares of others in a world that will continue to grow. Do not believe for a second that we have none of the qualifications required for the future. We have very well trained people that we need to set up with new tools, and we need to use more precise, more powerful tools. This is a fascinating adventure. Today, when you are an actuary within the group, and actuaries are the kingpins of innovation in insurance groups, the new technologies are a dream come true, even though they require some learning, attention, and efforts. But you have never had as much data available as an actuary. You have never had such powerful tools to process this data. And therefore, you have never been able to let your imagination and creativity run free, if you know how to control the tools and how to gear your imagination and creativity towards a given goal. Of course, there are businesses that will disappear, as is the case in the farming world. Tools are changing. Today, you don't harvest with a hoe. So this doesn't mean that the essence of the business will change. The essence of the business will remain, and our role as managers of the group is to, as quickly as possible, understand how we can take on board these tools and techniques to put them at the service of the group's transformation, and therefore, at the end, to serve the clients. I have no anxiety whatsoever. Who would like to shoot first on Africa? Jean-Laurent, so as this was recalled in the presentation, we pursued our investments in 2015. We were historically present in French-speaking Africa, around Senegal, Gabon, Cameroon, and Ivory Coast. Today, we have penetrated the English-speaking African market with Mansard, that has become AXA Mansard. That makes us number 3 in Nigeria, which allows us to work in P&C, life and retirement, and health. We have very strong development ambitions based on this entity, which is endowed with a remarkable management team. Also, we have continued to develop in North Africa with Egypt and Algeria. Algeria began 4 years ago, and we are happy to see that the life insurance company has already reached break-even, and this is true for the P&C enterprise next year. Sticking to its development plan. In Egypt, we've created from scratch BU as well, to develop life insurance activities first and quickly in health and P&C as well. Last point I wanted to underscore, over and beyond our historical presence in Morocco, is that we have invested in Africaré, which is a very important insurer created by a number of African governments, and we are one of the first private investors to have been invited to join the capitals. And we have an interest of 7%, which gives us, in the African insurer community, a strong presence because it allows us to connect with all the markets and to work from a long-term vision on the production and development of the markets that we expect to be very strong. I would just like to add two more words. Africa is a development on traditional distribution networks in more populated countries such as Nigeria and Egypt. But also we believe that this is an opportunity, as we see in other industries in April, to be able to leverage and use new technologies. Henry talked a lot about our investments in the Africa Group, and also, instead of paying compensation, for example, on the loss of a harvest, we pay for the satellite images to decide whether there was a drought or another event. Also, we took out a 46% interest in Abrico Insure. That is a micro insurance broker developing his business via smartphones to be able to reach much wider and larger populations. And so Africa is also open to new technologies and digital in link with the strategy we described. Next question. Lionel Garnier, Le Revenu. 2 questions, please. You pointed to the weight of developments in Asia and tomorrow in Africa and Latin America. In view of the maturity and the depth of the financial markets in these areas of the world, is this synonymous with specific investment restrictions? And how do you manage your assets in this case? Second question, at the beginning of the presentation, you indicated that between 2010 2015 in the Mediterranean region, Latin American region, you said this was just a beginning. is a beginning because you will further emphasize your presence in Africa, or is it because you were thinking more about Latin America and particularly Brazil, where you have worked on given initiatives? Denis will give you the answer to the first question. As regards the development in the Mediterranean and Latin America, Jean-Laurent is here, could go into details. We are the second insurer in Mexico. This is what we bought back from ING. And it is a market that is strongly correlated to the American market. We now have a very significant presence in Colombia. Yes, we intend to develop our activities in Brazil, but we're not impatient to do so. In other words, we here have set up a team. We have bought out commercial risks that were inherent to Sur America. If we can go further in the future, we will. I think that an attentive and reasoned approach to the market seems to be the best answer, because today our presence on the continent is much smaller than our presence elsewhere. It is not our idea to be present on all markets. Once again, we have to be selective. There's a size issue, a growth perspective aspect as well. And maybe one day we'll go further. This is part of our current analysis as well. But in the short term, there are no plans. The investment policy, says Denis, we manage our investments in emerging markets with the same caution and long-term vision as we do elsewhere. These markets are more volatile, therefore we need to be more cautious. We also were negatively impacted by the fact that we have invested in countries where money was, the currency was depreciated over the past few years in view of the oil crisis as well. This is a local view of the situation, and also our presence in China is growing strongly. But the object of our investment portfolio in China is under particular scrutiny because we have invested almost 3 billion in China amongst our two partners. And of course, we have to supervise the stock exchange fluctuations as well, since the market has sharply dropped recently. Shadow banking, in other words, all of the investments in non-listed yield rates. And this, of course, has existed since early 2010. So we have to continue to invest, but prudentially, so to speak. Hi. Carla from Italy. What are your relationships with Generali, your Italian colleague, and more widely in Europe? Do you think that this could come to a consolidation policy? Our relationships are based on distantly friendly and fraternal relations. Will there be consolidation in Europe? You know, I don't know. Today, the issue is no longer an issue of size. 99 billion euros in revenue, and in 60 countries, the issue is not size, it's transformation. Next question. Florian de Lamby. I have two questions on the French market. The first one on UCs. You talked about a fairly significant shift at group level. Do you have more precise numbers as regards the French market? And the second question is, I can see there's a slight drop in P&C in France, and I want to know why and what segment are we talking about? Is it home insurance or automotive? Nicolas, whose teams have had phenomenal results in France this year. As far as UCs are concerned, we have produced about 40% in individual savings in UCs, real estate, and OPCI that did a wonderful job on structured products. and also on agreements, because many of these assets are within the framework of agreements and conventions. Now, the decline of the results in P&C is due to the commercial lines and to individual lines. As regards corporate lines, commercial lines, therefore, we have between 2008 to 2013, 2014, we invested in the construction market, and with the economic crisis in France, we had to change our portfolio, which explains the slight decline as regards the revenues in construction. Now, individual lines were very competitive in France. Many participants want to invest in this market, and this is what we see as well amongst the major risks, or on insurance, where we also see a slight slowdown of this market. At the beginning of 2016, this is also visible for prices. Although we are in positive net revenues. In other words, we bring in more clients than we actually lose, but of course, the changes in the price has had an impact on our revenue. Automotive, we're also in a very competitive market because with the Hamon law, many of our competitors have tried to take an aggressive stand on this market as bank insurers. Automotive, the combined ratio of the market is at 106. So many of our competitors are taking up market share on a losing market at the moment. And we have maintained our prices. We even slightly increased them last year. And we have seen an erosion of our fleet after 3 years of erosion on other fleets. So the Loi Hamon has an impact on the process, on the cancellation mechanism. Before, when people canceled their car insurance, they had to visit the agents. And people could, in fact, propose other products to replace the automotive contract with. Now, we had less buffer now than we did in the past with our commercial teams, which explains the cancellation rate. Yes. We also need to remember in all that AXA France has, Henri has said, an excellent financial year 2015 with an increase of 12% in life insurance new business. And I think that we can also say that everything that concerns health, AXA France, at the end of 2015 and 2016 have posted extremely positive numbers. Next question. Yvan Best, La Tribune. I think I understand that Spain is perhaps the source of the drop of profits in the Mediterranean and Latin American region. Very, very significant in P&C and visible in savings. Can you tell us a little bit more about your strategy in Spain? It's not Spain, it's Turkey. Turkey is impacting the 2015 results in the Mediterranean and Latin American region. The earnings are dropping in Spain, and it is eroding because precisely we have changed our selection in portfolio, particularly as regards that part of the portfolio that was managed by brokers. And therefore, we wanted to work on a better profitability level product. And of course, it went through the internet under the AXA brand, which demonstrates that we have restored our dynamics and we are not submitted to the pricing fluctuations of the market in Spain. The combined ratio in Spain has dropped by 2.5% and is down at 99%, where over the entire Spanish market it has increased by between 2 and 3 points. In other words, our profitability gap versus the Spanish market in general is at around 5 points. And as we heard Nicolas describe, there was, of course, an aggressive attack on the market from some of the insurers who want to aggregate the data. So, in fact, we are developing our means through digital tools, and we are growing in Direct Seguros or AXA Seguros in Spain. So that's the Spanish situation. In Turkey, the topic is different. There has been a series of new laws that were extremely unfavorable to insurers in 2014 and 2015, which have in fact simply led to the creation of new warranties to victims that were not initially planned for in the contracts. And of course, this was confirmed several times by the Supreme Court in Turkey, which has led to many problems on the Turkish market. And in fact, we have here constituted provisions. So we have provisioned our activities in Turkey. And the impact on the group is about one combined ratio point for the group. It's far from significant. It doesn't change our long-term view of the potential of the market. But today we really have an issue with civil liability in Turkey. And we have had to shift the weight of this civil liability activity to benefit other business lines, which means that if we exclude civil liability, we have an increase in our activity in Turkey that is at 11%. But if we include it, the revenues remain stable. So what negatively impacts the results is, of course, a strengthening of our provisions that is a high one. And this will allow us to return to a more reasonable situation. Otherwise, the conditions to exercise this business line on that market are totally unwithstandable. And we will have to draw the conclusions, which is something we've done as regards prices. As says Denis Duverne, we have more than doubled our price on civil liability insurance in Turkey. And the issues we are facing are associated with the fact that laws are retroactive. So this is a topic for preoccupation, but we are also working intensely in lobbying activities with local insurers and Turkish authorities to be able to avoid this inflationist trend. Thank you very much. Next question. Sébastien Sédot, Argus de l'Assurance. I would like to return to the systemic insurers. Could this, in fact, be perhaps an impediment to non-traditional insurance activities? We also have players that have decided to withdraw from the U.S. Are you also thinking about compartmentalizing or divesting from the P&I sector in the U.S.? And also life insurance, could it end up being listed in the non-traditional aspect, business lines, and would it therefore be more expensive? And last question, percentage of available cash flow that your BUs have showed as being earnings. Now, as regards the definition of systemic insurers, I can see that you are really knowledgeable. If you can tell me what a non-traditional insurance activity is, then I'll give you a bottle of champagne or something. And Denis is very much involved in this fascinating topic as regards how to designate Euro funds and how to process them. We do not believe that this will lead us to change our group organization in any way. Now, as concerns MetLife, you need to remember is an international systemic insurer, such as AXA, one of the 9, actually, and also a local systemic insurer. Now, the consequence of being called a systemic insurer in the U.S. is that the Federal Reserve is beginning to think about the new solvency rules for MetLife, Prudential, and AIG in the U.S. Now, the split of the MetLife group that is planned is focused on hedging against new regulations, much more so than having anything to do with its appellation as a systemic insurer. Now, second point on MetLife, Americans, in fact, don't really care about what is happening in the FSB or et cetera, because the American Congress is opposed to allowing the application of these rules in the U.S. So even though there are rules that exist worldwide to designate systemic insurers and capital impacts, the U.S. will probably exonerate it, which of course will be a problem for Europe. This will happen in 2019, and Europe will then have to decide whether it's a very good idea indeed to implement a regulation that has been decided as a no-no by the U.S. So this, of course, will have an impact on systemic insurers. Now, AIS, of course, has been working on the rules that apply to the designation of systemic insurers. But this doesn't make much sense, actually, because we've seen that insurers are not systemic. And as a matter of fact, this is what AIS says in general. And how can we, of course, here designate insurers as being systemic insurers? So their first approach, because there were some issues in the U.S., their first approach was to say, we are worried about variable annuities in America, and then the insurers have put up barriers to this particular issue. And the subject of a Euro fund is also being asked. We don't think it's a very good idea because there isn't anything that is as stable, because clients who remain after the 8-year plan, I think that the cash flow risk on these products is very low. So we are going to fight to avoid finding ourselves in a paradoxical situation where the only dangerous products in the world would be the French Euro fund. Also, your question, cash flow. Cash flow in 2015 was 5.8 billion euros, which has grown by then represented growth, of 5%, and of course there was a billion euros, and of course the cash flow increase of 7%, whereas the indicative range was 75 to 85. So we are way above this range in order to cover the refund of loans on the part of our BUs. What we can see about systemic insurers is that the issue involved also the systemic insurers. Then little by little, this disappeared because we had to include one, and Berkshire was the choice, the number one. Also, Europe has a system called Solvency II, and the only risk we run is that there may be the development in Europe of a system that would not be compatible with Solvency II, because then that would mean a two-handle plane. Ruthers, you have Ruthers, excuse me. You have mentioned your succession planning, maybe for 2018. In view of the challenges facing the world of insurance, digital solvency, and other issues, what is, according to you, the ideal profile for an AXA CEO? Would it be an external hire or an internal choice? Is there going to be a short list? And also, could you perhaps dissociate the functions of CEO and managing director? It will necessarily be someone who's a lot better than me. Secondly, you can trust the group that is approaching its future in the long term with its solid numbers, and that I am every morning, every night, proud to deal with these issues professionally and with discretion. Antonio Royan, EGFI. Question on digital. We saw that Google has just removed its financial service comparison, its financial system comparison service. And is this something that could apply to ensure? I'm happy you've asked this extraordinary question. It shows that professional know-how, even facing the challenges of new technologies, still has value. Google is a remarkable enterprise that has spectacularly innovated and is continuing its growth. But we do not have anything to be ashamed of as regards our technical knowledge and know-how. And if they, as a very widely recognized enterprise, turns away from this particular service, means that traditional insurance is still very much alive and kicking. And this also means that Google will not be the master of the world. We have close ties, but I think you should remember that I said that in 1880, the Google was Standard Oil because they were a leader in new technologies. People are afraid that they will gobble up the world. But in fact, life is more complicated than that. And it is according to the speed at which the different sectors of the economy and services industry will take on board these new technologies, and according to the speed they will survive or they will die. And look at what happened in the automobile industry, where the Google car is a very interesting concept. But we see that manufacturers are taking this tool on board, of course, much more readily than someone who doesn't know anything about the automobile industry. Look at what is happening in other areas, particularly in the tourism industry. Travel agents are disappearing, but the hotels are reacting. In such a dying sector as taxi transport in the Paris area, well, finally, the taxis themselves are taking on board the additional services given to the client. So we must not, nonetheless, underestimate these partners. We can perhaps envisage them as partners of strategic importance, and that can change. Now, we necessarily have to learn from each other because, in fact, our ultimate goal is to improve the way we serve our clients. Yes. A question that doesn't really directly concern AXA. I'd like to have your opinion on the law to reform the employment market. To know whether this will be approved in its current version. I think that in view of the interest and depth of the debates that it generates, I think we should have to wait a little bit. Now, as regards the nature of the project, everyone knows that one of the major structural disadvantages regarding competition in France that is very costly, not just in financial terms, but also in social terms, is the rigid employment law. There are people who have very stable employments for life, the employees of major companies or civil servants, and people who are in precarious situations. We cannot ignore that our unemployment rate is today sometimes twice that of our other economic neighbors, such as Spain or UK. We cannot ignore that every year there are 200,000 young people who come out of higher education without any qualifications and who therefore do not have a very positive view of their future on the employment market. We cannot help also but observe that the policies carried out since 2012 have led to the fact that the jobs created in the business in the country have in fact only been subsidized public jobs and not merchant private jobs. So when a government has the courage to put on the table a text that is offering to change the situation, and that when those who are opposing the text vigorously are those who, through different texts, have sucked out the competitiveness of this country for years. And we cannot not think that the new text perhaps has its own virtues, and it may be in our interest to see it flourish. As a matter of fact, one of the reasons the situation is turning around in Italy is because Mr. Renzi, who is not considered as an outright liberal or right-wing politician, has been able to create upheavals in dogmas and certain approaches, and this is beginning to bear fruit. I think we have questions online.
From Herbert Fromm from Süddeutsche Zeitung. First question is, can you enlighten us on your succession planning for your top management, CEO and CFO? Who will succeed you? Will you reveal it now or when you introduce your strategic plans in June? Second question, we have seen some consolidation in mature markets. Are you part of that? Would you be interested to take over Zurich? Third question, could you tell us how you intend to increase your rather disappointing market share in Germany?
I think I've already answered the first two questions, but since I don't want to disappoint our friend Herbert Fromme, I'm going to take that again. You know the story about the difference between an ordinary actuary and a Sicilian actuary. An ordinary actuary will give you probabilities of death, and a Sicilian actuary will give you names, dates, and locations. On my succession, I'm going to be the normal actuary, and I will become Sicilian in due course. That's the answer to the first question. To the second question, on the consolidation on Zurich, to the best of my knowledge, I don't think Zurich is for sale, point one. And point two, I think I've already answered the question, because I think the key opportunity and the key challenge for the group is to transform its own operations, becoming more efficient using the new technologies. It doesn't mean that we are not going to acquire here and there to expand the scope of our activities. But why would you go for traditional targets, assuming that they would be available targets? Why would you go for them if they are traditional companies, and if the key challenge and the key opportunity is through a deep transformation of your own operations to take market share without having to buy balance sheets? Interesting question. On Germany, where contrary to what Mr. Fromme seems to be thinking, we've had a record year, and since Thomas Bubel is in the room, I'll ask him to answer the question and give some insights into what we've been doing and why we think our operation there is a strong one. Thomas, go ahead.
Yes, thank you, Henri. I fully agree with you. The market share is not disappointing. There's room for improvement, and in the last couple of years, we have significantly reoriented the company towards the future, be it more commercial lines in P&C, but also be it more and innovative products in life, as you've seen for the whole of AXA, and on the health side, also towards the supplementary product, which has led to a market share gain in the last year, certainly, and we are clearly planning to use this position now to grow the base that we have more, because I fully agree there's room for improvement which we want to use.
Thank you, Thomas. Est-ce qu'il y a d'autres?
Are there any other questions? A question of Edouard Lederer, Les Echos. Are you directly exposed to oil, and to which degree? We are modestly exposed to oil amongst the 500 billion euros of general funds. Denis will give you the exact amount, around 2% of the whole, and he will give you more details, not many more. 2% of our investments, and among them, an average ranking that is very, very positive, 12 billion investments at all. And you can see that our position here is very positive. So we really don't have very many sleepless nights on this issue. Also, the indirect exposure that we have through banks who themselves are exposed by their loans to oil activities do not yield a very anxiety-ridden environment either. Question from a distributor. What is the digital impact on your distribution networks, and how do you accompany your agents in this transformation? Véronique, the floor is yours. I think that we have, for a while now, explained our determination to undertake this transformation in cooperation with our agents and distributors. So what we do involves three things. We give them tablets and digital tools. We have set up a partnership with LinkedIn and Facebook, so we help them grow their business thanks to these social media. And we also are helping them continue to increase their sales capacity through greater attention to advice. And of course, this is not going to do away with our distribution channels, but rather to include them in this transformation. In 2015, we invested 450 million euros in digital transformation, both in tools and in training. And we really believe that this is the best way to guide this transformation, as Henry described it, and we do it hand in hand with our distributors. I think we finished with our questions. If that is the case, thank you for having come to us this morning, and have a great day.